Emily, you ready to roll? All right. Good morning, everybody. Hang on to your hats. This one's going to be a wild one. So last week we got together and we talked a little bit about PPP1 and 2 and all the changes that were there. And I hate to tell you this, but that stuff was easy compared to what we've got to go through today. So just to give you a little brief about what we're going to talk about, I'm going to just recap the programs that are out there that you may be eligible for. And you really need to go through line by line by line and see if there's any way you can qualify for each of those benefits. So and maybe Emily can throw a link to last week's PPP slides into the chat box for any of you who'd like to go back and watch that recording and just see if you're eligible for PPP1, PPP2, or both. Today, after we recap all the programs that are out there, we're going to take a deeper dive into the employee retention tax credit. So I've got some examples of businesses downtown. I've anonymized the data, but giving you some basics about how this might apply. And then I'm going to try and cover most of the common questions. And as we go, if you come up with different questions, comments, or advice, if you'll throw that into the chat box as soon as I get through the slides, we'll go through all those questions and comments. All right, I'm going to share my screen and we will get started. All right, Emily, you're top of my list. Look good? All right. So just to recap, that's terrible. First slide, and I've got a typo in the title, benefits you need. So the programs that are out there now, we've got PPP1, which is a forgivable loan equal to 2.5 months of payroll. And new people are eligible for that program. So if you weren't eligible for, you may be eligible now. In addition to PPP1, there's a second round of PPP2, and it's equal to 2.5 to 3.5 months of payroll based on your business type. You can get both PPP1 and PPP2. So those are benefits that almost everyone ought to qualify for. The next two programs are the two that we're going to cover today, which is the Employee Retention Tax Credit 1, which funds up to 50% of salary expenses up to $5,000 per employee. And then there's ERTC2, which is 70% of salary expense up to $7,000 per employee. And then there's a grant for shuttered venues. There are not many people that applies to, but for the venues that are shuttered, there's a cash grant of up to 45% of the 2019 annual revenue. And then for anyone who has or is going to get an SBA loan, this is just an outrageously good deal. The interest rates are already incredibly low, like less than 3%, unbelievably low, fixed rate, long-term financing. And not only that, not only are rates at a record low, they're going to make the payments for you for up to 11 months. Again, that depends on your specific business type and when you get the loan, but you can get up to 11 months of payments made for you on an SBA loan. So to recap the Employee Retention Tax Credit in general, the first Employee Retention Tax Credit was enabled by the CARES Act in 2020, and the second by the Economic Aid Act. You can Google those two acts if you have more in-depth questions and want to read the text of the actual law. Both programs are credits against payroll tax that employers pay to the federal government. If you do not pay payroll tax, like some sole proprietors whose taxes flow through just to their individual returns, you can't use the credit. So you have to be in a position to generate some payroll tax liability to be able to use ERTC1 or ERTC2. The credit, although the credit is refundable, so you don't have to generate as much payroll tax as the credit's worth. Even if you don't generate as much payroll tax as the credit's worth, the IRS will refund the credit to you. So just to go over those two things again, you have to be paying payroll tax, but the credit can exceed the payroll tax that you pay. The other thing is there are some different rules to employers with more than 100 employees. I'm going to skip over that because that doesn't apply to most of you. And they're mostly just limited to what's eligible in the payroll calculations to determine the amount of your credit. So it doesn't mean that employers with more than 100 people can't get the credit. Most of these same rules still apply. So the changes that have happened with the new Economic Aid Act, initially you had to pick between PPP1 or ERTC1. In fact, we taught a whole class, God knows how many times, to try and help you pick which one was going to give your business the better benefit. For some businesses, they decided to use the ERTC because they were closed and weren't going to reopen. So the PPP wasn't going to give them much benefit because they weren't going to be paying payroll costs yet. So some of you chose to do the ERTC instead of the PPP1, and that was the right choice. But now you get to do both, even retroactively. So going back to that time period when we were picking which one was going to work and which one wasn't, now you get to go back and do whichever one you didn't do. So if you did ERTC before, you now get to do PPP1. If you did PPP1, you get to go back and do ERTC. And then in addition to enabling you to double dip with those PPP1 and ERTC, this adds a new ERTC2 program. So I'm going to start for those of you who need to go back and do ERTC1 now. So the easy part is if you do ERTC1 instead of PPP1, you need to apply for PPP1 now. So to get your PPP1 application in, Emily's posted the link to that video in the chat. You can go watch that webinar from last week. You can follow up with us individually with questions if you've got them, but that should be everything you need to get your PPP1 app rolling. The deadline to apply for PPP2 is March 31st. So if you did not do PPP1 and you're going to be eligible to do both PPPs, you need to get PPP1 in ASAP, in and spent, so that you can apply for PPP2 before the deadline. Now, if you applied for PPP1 instead of ERTC1, or you didn't apply for either, you need to see if you qualify for the ERTC1 now. The only thing I'm going to mention is that you cannot use PPP and ERTC for the same wages. I just got an email from a downtown business owner with one strategy I had not thought of. The safest strategy to make sure you're not doing this is to apply the benefits in different quarters. So you want to be expending your PPP for forgiveness in one quarter and applying your ERTC benefit in a different quarter. That's the safest thing to do. But I heard from a downtown business owner whose plan is, because 40% of PPP can be spent on non-payroll expenses, that's what they're going to do. They're going to maximize the amount of PPP that's not spent on payroll, and they're going to apply the balance of their ERTC in the same quarter. I think that's probably a pretty good strategy too. This is not crystal clear from the IRS, but what is clear is you can't use it for the exact same wages. So ERTC1 qualifications, you have to be a business, a nonprofit or for-profit, and your revenues have to have dropped in a calendar quarter 50% from 2019 to 2020, or you are partially or fully ordered to close. So I'm going to give you examples of businesses that qualify under each of those qualifications. So, I mean, that's really pretty simple because almost every business was ordered to close. So there are very few businesses that doesn't apply to, but if you're an essential business who continued working the entire time and you did not have a revenue drop of 50%, you're not going to qualify for ERTC1. Almost everyone else is. So what ERTC1 will do is fund 50% of your employees' wages during the quarter that you meet one of those criteria. That's the 50% decrease in revenue or partially or fully ordered to close. The maximum credit is $5,000 per employee in total, all quarters. So even if you qualify for either of these standards in more than one quarter in 2020, once you hit that $5,000 cap per employee, that's it. That's your maximum benefit. And the way this works is that you're converting payroll taxes to operating funds to pay the credit. So the way that you apply for this, if your credit is less than the tax, then you use step 3 on worksheet 1 of your next 941 to fill out your ERTC eligibility to reduce your payment by the credit. So everybody with me so far? That just whichever 941 is your next up, which is going to be January 31st for most of us. There is a worksheet in the guidance for filling out 941. You fill out that worksheet. It carries over to the 941. You take the payroll taxes due, you reduce out the credit you've earned, and then you only pay the IRS whatever's left. So in this case, it's a little bit simpler than PPP because there's no application process. There's nobody making a direct deposit. You're just going to pay the IRS less payroll tax than you normally would and get to keep the difference. Now, if your credit is greater than the tax, that's also fine. You're just not going to use your Form 941. You're going to file Form 7200, and that is going to result in a deposit for you from the IRS back to you. Now, there's one other option in either case, and that's if you use a payroll service, they may be able to withhold the ERTC for you without even paying it. So as you're setting up your payrolls on whatever schedule you do, weekly, bi-weekly, bi-monthly, you as the employer having to fund in the payroll tax on each of those cycles, your payroll provider may be able to stop taking that money out, stop billing you for it. So it stays in your operating account at the get-go to use this credit. So the application process is to file your Form 941. And then if it exceeds the amount, you file the Form 7200. You can Google Form 941 or Form 7200. You select the quarter during which you were closed or which you had the revenue decline. You fill out the section your total employees, your total eligible wages, and the credit you're requesting. And you can do that for more than one quarter if you're eligible in more than one quarter. So this sounds a lot worse than it is. It's something you're already filling out these forms quarterly anyway to report your payroll tax, and they've updated the forms with special line items and worksheets that relate to the ERTC. So if you know the basics about whether you're going to qualify or not, and you know the details of your payroll, you're going to be able to fill this out on your own. So we're going to dive into an example for ERTC1. So this is a nonprofit organization. The payroll is around $600,000 annually. They're 10 employees. They had a revenue drop of 30%, which qualified them for PPP1. And so they've already received and spent PPP1. But the business was partially closed by the governor's orders. And I had to go look this up. But the state of Georgia was under a shelter-in-place order from April 2nd to April 20th of 2021. So here's an example of the revenue chart for this business. As you can see, the 2019 and the 2020 revenues are actually pretty stable overall. But in that second quarter, April to June, they had that 30% dive in revenues that made them eligible for PPP. But it's not enough to make them eligible for ERTC for the whole quarter. So, because the revenue dive was not 50%, we've got to look at the closure time. And if you're going to apply for ERTC because your business was closed, closure is only an eligible qualification for ERTC if you're not able to operate effectively by working remotely. So if you were able to switch into remote work and it doesn't affect your operations, even being closed is not going to qualify you for the ERTC. This has to have had a substantial impact in your operations. I can think of a couple examples from downtown, like if you're a restaurant or if you're a car service business, obviously you can't work remotely. So a closure is definitely going to affect your operations. On the other hand, if let's say you are a let's say you offer psychological services and you were able to switch all of your clients over to remote access, didn't lose anyone, didn't interrupt anything, and you were able to give the same service you were given before. Well, in that case, it really doesn't matter that you were closed. You're not going to qualify for ERTC. The other thing is, if you're going to qualify because you were closed instead of because of the revenue decline, the wages only count during the closure. And again, those can't be the same wages paid by PPP1. Again, the easiest thing for that is to apply these benefits in different quarters if that's possible. So here's an example of those 10 employees for this company, their annual wages, their daily wages, and then the days they're closed. So all you do in this case is you take the annual payroll, divide it out into daily payroll, multiply it by the days closed. You've got the qualifying rate wages, and then 50% of those wages are eligible for this tax credit up to $5,000 per employee. So in this case, you can see that nobody hit that $5,000 limit. Everyone's under the $5,000 limit, and it adds up to around a $21,000 benefit, which is huge, especially when you consider that this business is also going to get PPP1 and PPP2. So you're talking about another $21,000 of benefit by going back and using the ERTC1 program. So just to run you through what the application would look like for this business, this company, their next 941 is due on January 31st of this month, just a few days from now. So they have that $41,000 paid in wages. Half of that is eligible for the ERTC. So they file their next 941, and instead of paying the payroll tax, they're going to reduce out $20,769 from what is due to the IRS, and that money stays in the operating account of this business. Here's another example of ERTC1. This is a for-profit sole proprietor with no other employees. They've got some independent contractors, but only one employee. Now, the owner does pay a W-2 salary at $30,000 annually. This is a little bit unusual for a sole proprietor, but they do have salary expense. The business was partially closed for 2 months. They got their PPP1, but their sales were down 60% from April to June of 2020 and in July to September of 2020. So in this case, they meet either qualification for ERTC1. But which do you think is the better qualification to use? The answer is the revenues, because again, the closure was only for 2 out of 3 months, and you're only able to claim for the time that you're actually closed. So if you meet the revenue requirement, that's better because that's going to cover a whole quarter. So in this case, they've got 2 quarters that they qualify for, and they're going to qualify for basically all wages paid during those 2 quarters to get that 50% credit. So here's what those revenue declines look like. This business was grossing about 120 grand in 2019. They grossed 132 in 2020. They ended up with revenues increasing year over year. That's fine. Doesn't matter. All we're looking at are those calendar quarters. But you look at those 2 calendar quarters, April to June and July to September, they were down 60%, both those. That's going to qualify for the ERTC1 in both quarters. So just to give you that comparison on the days closed versus the entire quarter, the annual wages paid and the daily wages, you're looking at a $2,500 credit for the days closed, but a $5,000 credit for the quarter qualification, because you're going to get those 2 quarters instead of just those 2 months. So in this case, it's the difference between maxing out the credit and not, and it's the difference of $2,500 for the business. So that's a really big deal. And how they're going to apply is, again, just like the first business, they're going to file Form 941 on January 31st. They fill out the worksheet to show the eligible credit for 2 quarters, but the credit's going to exceed the payroll taxes due. That's fine. They're just going to use Form 7200 instead, and they'll get a $5,000 refund from the IRS. Okay. So that's the end of the examples for ERTC1. That's the one where we're going back and we're looking at 2020, and that's the thing that was enabled by the CARES Act that you now can double up on. I'm going to talk about ERTC2 now. So again, ERTC2 has really similar qualifications. Both nonprofits and for-profits are eligible. but your and the revenue drop is smaller. Remember, we had to have a 50% revenue drop to qualify for ERTC1. Now you only need a 20% revenue drop, but you're comparing different time periods. Now you're comparing 2021 to 2019. So right now, nobody knows if they qualify for this because the quarter hasn't ended, right? So first quarter will end the end of March, and that's when you'll go back and compare January to March of 2021 to January to March of 2019 and see if you had this 20% revenue drop that would qualify you for this, this program. Or, I mean, I can't imagine who's under orders to close, but if your business was or is ordered to close during one of these first two quarters, you're going to be eligible as well. This program applies in the first two quarters of 2021. So you'll do the first one will end in March and the second one in June, and you'll do those comparisons to 2019. The other thing that's changed is they're funding an even higher percentage. ERTC1 would fund up to 50% of wages. This one goes up to 70% of your employees' wages during any period that you meet these qualifications, which is the 20% revenue decline or your order to close. The maximum credit has also increased. I told you before, even if you qualified in more than one quarter, the credit maxed out at $5,000 per employee. The credit now maxes out at $14,000 per employee. So you can get 70% of wages, up to $7 grand per employee, and you can do that in up to 2 quarters. That means a maximum of $14,000 per employee. And it's paid exactly the same way. You either don't pay the IRS, the payroll taxes that you owe, you reduce those by the credit amount, or you can get a refund from the IRS using Form 7200. So again, the application's exactly the same. You will claim this credit on the 941 that you file in the quarter that you qualify, or the next one after that, or you'll use the Form 7200. And again, if you use a payroll service, they may be able to eliminate your withholding, so the money stays in your operating account. You don't even have to worry about getting a refund. So here's an example for ERTC2. Again, I'm looking a little bit into the future here. There's no way I could give you real numbers because we haven't gotten to March of 2021 yet. But for this business, their sales are going to be down in this quarter compared to January to March of 2019. They have a $2.5 million annual payroll with 75 employees. So an average annual salary of $33,000. I just averaged this one out because I can't show 75 lines on an Excel sheet in one side. So looking at the revenue numbers for this business, here's the 2019 and the 2020 numbers. You can see there was a precipitous decline. They were down by more than 50% in 2020. And, you know, in that quarter, April to June, where we had the closures, they almost had no revenue during that time. July to September, they were down by more than half. And then in 2021, things are down from 2019 again. So they're only expecting $640,000 of revenue in this first quarter. So that they meet that qualification of having revenues down in the first quarter of 2021 compared to the first quarter of 2019. And because of that, they're going to be able to claim the Employee Retention Tax Credit 2, ERTC2. So looking at that average annual wage of $33,000, that gives them a quarterly wage of $8,300. Right now, all we know is that the first quarter is down that qualifying 20%. So the 70% credit based on those wages is $4,000 per employee. That's less than the $7,000 max. But times 75 employees, that's a $312,000 benefit. So you can see for businesses that have more employees, this can add up to a huge, huge number, even bigger than PPP. And again, you can get both. So this is a really big deal. All right. So here's a fourth example. This is an example of a business. If they're going to be, they've only got 3 employees. Hold on a second. Here's the summary. I skipped it. So it's a for-profit business. They have $60,000 in annual payroll expenses with 3 employees, but they're expecting sales to be down in both of these eligible quarters of 2021. That's January to March and April to June. They're expecting revenues to be below their 2019 revenues by 20% in both those quarters. So here are the employees. They have 1 employee making 40 grand and then 2 more making 10 grand each for that total of $40,000. That comes down to a quarterly wage of 10 and 2,500. If they're down both those quarters, that means the qualifying wages are 25 and 5. So for that employee making 40 grand, they're going to max out that credit at 7 grand each quarter for a total of 14. And then they'll get 2,500 for each of those other 2 employees each quarter for a total of $5,000. And the math's wrong. So that's $24,000 of total benefit for this business. By using ERTC2. So just to summarize the ERTC program, almost every business that pays federal payroll tax is eligible for additional cash grants through ERTC. And the credits are worth half your wages paid, up to 70% of your wages paid for ERTC. They can be tens of thousands or hundreds of thousands of dollars. And the safest thing to do is apply for PPP forgiveness in a different calendar quarter than the one you claim ERTC eligibility, if that's possible. So your next steps, if you're eligible for any of these programs, you've got to apply for every single one of them you're eligible for. And we will update you as we get additional guidance and regulations. And we can answer your questions individually by calling, texting, or emailing any of us. And we'd also like you to keep us updated. So as you get advice from your individual tax professionals, CPAs, tax attorneys, and as you go through the application process, we'd love to hear success stories, challenges, problems, anything like that, so that we can share that information with all your fellow entrepreneurs. And because all of you are calling us, so the more you update us, the more you let us know, the easier we're going to be able to disseminate that information. And we need you to succeed, and we don't know what's ahead, but we know these programs are available now. So if you qualify, apply. All right, I'll answer some questions, and I'll put a link to my slides in the chat box too. All right, so I've got the first question. Will our payroll company fill it out, or do we need to request the form from them to fill it out themselves? No, if you use a payroll company, they're typically prepping your Form 941 for you anyway. So you may need to fill out the worksheet. Just be prepared to give them that information, but they should fill out the 941 and file it for you just the same as they always do. And Richie's questions, would businesses that started in February 2020 be eligible for the ERTC2? Yeah, I believe that is yes. I believe it's the same date as PPP, which is February 15th of 2020. If you're in business by then, you're going to be eligible. And there are some different, for those of you who have businesses that started late, you already know that you can't compare to 2019. So there's special regulations about how you do the quarterly comparisons for your revenues, but typically you're going to compare the quarter that's applicable. So in ERTC2's case, you're going to compare this quarter right now, and you're going to compare it to the earliest one that you functioned, and you're going to look for that 20% decline. So just on that measure alone, it's going to be pretty hard to qualify, because in your startup quarter, you probably had lower revenues anyway. And so you're probably not going to meet the 20% reduction test. But yes, I think if you could apply. And the next question was about EIDL funds. No, there's no relationship at all between EIDL and ERTC, other than you're supposed to be spending these all on different things. But EIDL is practically unlimited on what you can spend it on versus these other programs. So as long as you're continuing to function and incurring expenses, you ought to be able to track it out to show that, ERTC and PPP prioritized payroll, and EIDL covered almost anything else that wasn't eligible for those programs. Any other questions or comments?
Just to confirm, Josh, for ERTC2, it's a revenue drop of 20% or more, right?
Yes, in quarters that are happening now, right? You're comparing 2021 to 2019. So nobody knows if they qualify for ERTC2 yet because the first quarter hasn't closed. But it is eligible for the first 2 quarters of 2021. And it's going to be a 20% drop below 2019 numbers. Hopefully, people are going to have trouble qualifying for that. I spent the most time on ERTC1 because I think that's the most relevant, because the governor's orders closed almost everyone. So almost everyone is going to qualify for ERTC, and almost no one applied for it the first time around. So that to me is the most relevant. I'm really hoping that most businesses, as vaccines roll out, that revenues are not going to be 20% below the 2019 numbers. The only quarter where I think it's really possible is right now, because we didn't shut down until April, so it's entirely possible that this first quarter is going to be lower than the first quarter of 2019. So the next question was, how many quarters is it possible to qualify for ERTC1 and ERTC2? ERTC1 is capped at a maximum $5,000 benefit per employee. So you're probably not going to get more than 1 quarter out of it, although you could get up to 3. So it's the second, third, and fourth calendar quarters of 2020 are eligible for ERTC1. ERTC2 is only available for the first 2 quarters of 2021. And then, the maximum there is 7,000 per quarter up to 14,000 maximum. There's no quarterly maximum on ERTC1. It's just a $5,000 cap for the whole program. Any other questions? Yeah, so Phillips asked about the slides. I just put I'll copy this and put it back in the chat. Here's a link to all the slides, and I'll go back and fix the 2 typos. So every time you use this link, you'll be pulling up the latest version of the slides. You can pull those up anytime you need to go back and reference them. And we'll post sometime later today, as soon as this recording processes, we'll post it on YouTube too, so you can rewatch the recording and skip to the pieces that you need. Any other questions? I'm sorry this one's complicated. If it weren't so valuable, we'd just skip it entirely, but it's worth the hassle. When we sat down to run the numbers and looked at individual businesses that we've worked with that we know, it added up to thousands of dollars every time, and almost everybody was eligible in one way or another. And it's, the worksheets the IRS has put out are not impossible. This stuff, or your payroll processor's already generating it for you anyway. So if you are engaged enough to know that you qualify, you're going to help your payroll provider or your CPA or whoever's helping you. Having an informed client is going to make it easier for them to help you. So this should get you enough of the basics to know whether you're going to qualify, how much it might benefit you, and to chase it down until you get the money. And we're here to help if you need any backup. All right, that's all I got. We'll keep plugging away on this, and as we come up with new information that we think you need to find benefits for your businesses, we're going to tell you about it. And if y'all do the same for us, that would be really helpful. It was good to see everybody, and good luck, and I look forward to hearing from you.